China has just posted a record $1.2 trillion trade surplus. At the same time, the United States says its trade deficit with China is falling fast, down to about 200 billion. So who is actually winning this trade war? Because both sides can claim victory. And here's the reality most people are missing. The US may be shrinking its deficit, but China hasn't stopped exporting. It's just selling to someone else. And that changes everything. Hi, I'm Jasper Becker, and I've been following China for over 40 years. In this video, I will break the story down into three simple pieces. What's really happening to China's trade surplus? Why China is reducing its exposure to US Treasuries? And what to expect from the Trump-Xi summit this week. By the end, I hope you'll have a clear picture of where this relationship is heading. Yes, the US-China goods deficit has definitely fallen sharply from a peak of 418 billion to roughly 200 billion last year. That's certainly a major shift. Tariffs, supply chains moving, political pressure, all that has been working. But here's the catch. China's global trade surplus hasn't fallen. In fact, it's surged to around 1.2 trillion, the largest ever recorded. So, what happened? China didn't stop exporting. It redirected the flow to Europe, to ASEAN, and more to Latin America and Africa. The US deficit is shrinking, but China's export machine is not. Now look what China is doing with the money. For years, China recycled its surpluses into US Treasuries, peaking at around $1.3 trillion. Today, that's down to under 700 million. It's not random, it's strategic. China is reducing reliance on US financial assets, diversifying reserves, and managing exposure to the dollar. At the same time, the RMB has stabled at a stronger rate. This is not a sudden break. It's a slow, controlled shift away from dependence. Since 2020, Beijing's dual circulation strategy has been clear. Strengthen domestic demand, keep exporting, but on China's terms. In practice, that means buying more commodities from Brazil and less from the United States, more domestic tech and less reliance on imports. So China is reducing its dependence on the United States, but it is not reducing its dependence on exports. Trump's argument is more simple. Tariffs are working, the deficit is falling, China's share of US imports is down, and all that's partly true. The US is less directly dependent on China. But the bigger picture is this. The deficit hasn't disappeared. It's moved to Vietnam, Mexico, and other manufacturing hubs. So the system has adjusted rather than fundamentally change. This week's summit in Beijing is going to follow a familiar script. Expect large Chinese purchase commitments of things like agriculture, soybeans, energy, LNG, Boeing aircraft, and a likely extension of the tariff truce, and possibly a new board of trade to manage flows and disputes. These deals may push the deficit lower again, perhaps as far as $150 billion. But this is managed trade, not structural change. So here's the key question. If the deficit is really falling, is this actually a win for the United States? In some way, yes. The United States is less dependent on China for critical goods, more resilient in its supply chains, and better positioned to apply political and economic pressure. And that matters especially when there's a crisis. But there's a trade-off. Because the deficit hasn't disappeared, it's just shifted to other countries. Supply chains are now more expensive, and China's economy hasn't really weakened. It has simply adapted. So, this strategy makes America safer, but not necessarily richer. The US has reduced its exposure, and China has reduced its dependence. But this rivalry isn't going anywhere. So, where does this leave us? Has Trump actually done what he promised? The answer is partly, but not completely. Yes, he has reduced the US trade deficit with China. And yes, America is less dependent on Chinese imports. But the overall trade deficit hasn't disappeared. Manufacturing hasn't fully come back. It's shifted elsewhere. And China hasn't really weakened. So this isn't a clean win, and it's something more complicated and developing. But in the meantime, the US has made itself safer, but it hasn't made itself structurally stronger. China hasn't lost the trade war, it's globalized it. So this isn't the end of the story, but perhaps it's the beginning of a long-term economic shift where both sides become less dependent on each other. If you want a real-time breakdown of what actually comes out of this summit, subscribe and hit the bell and tell me in the comments, has the US really solved the China problem or just moved it somewhere else? Thanks for watching. See you in the next one.